What's going on, people? It's gbpbaby. Welcome to another video. It's currently 22 minutes past midnight on Tuesday the 11th of July, and we're looking at DXY. Hopefully you saw my recent video. I was showing you a trade execution that I done on Monday during Monday's trading during the macro. That was quite interesting, so make sure to go check that out. That's one of my first videos on me actually executing a trade and watching how price delivers live. So I highly suggest you guys check that out. But if you've watched my most recent video before that, which was my Sunday review, you'll see that I anticipated this kind of movement. I didn't expect it to happen on Monday, to be honest. We traded quite aggressively lower today on the Monday, as you can see, but we're going to zoom in and have a look at how price traded and where I'm looking for price to get to tomorrow. So you'll notice that we traded to consequent encroachment off this inverted fair value gap, which is here, and you can see how we traded up towards that, and then price turned away and traded lower, starting to run into these lows. Now we haven't actually taken out this south side liquidity yet, so that's what I'm definitely anticipating to get taken tomorrow, probably during the London session, or possibly during it could even happen during the Asian range with the way that price is moving. But if we drop down to the 4 hour, you'll see that I had this 4 hour inverted order block marked out as well, and you can see how price consolidates around that level. So we came, traded above it into that daily fair value gap, and then we broke lower. We wicked higher, taking out stops one last time, and then you can see we've aggressively traded down through a 4 hour inverted fair value gap, which is here. And we also traded through this breaker here, and now we're starting to run into this south side liquidity and this daily fair value gap. Now you'll notice on my chart I have a bullish order block marked out. This is actually a daily bullish order block. I'll show you that now. So this is the open of that. So I'm anticipating price to fill in this fair value gap. Whether it wants to reach down into this daily bullish order block open is another story. But I'm definitely anticipating this to get filled, and then I would like to see some kind of retracement. So as I was saying, we have traded very aggressively lower, so I do expect us to take out this south side liquidity before we see any kind of retracement. When we do get a retracement, I have my eyes on this breaker. Now if you watch my recent trade and execution video, you would have seen me use this specific breaker, but I'm going to explain how I used it last time. So I anticipated price to trade down to it and react to it during my trade, and you can see we did, but we've completely traded through it at this point. So now this should act as a bearish breaker. So I'm going to draw this all the way out, and I'm going to take off the rest just to clean up my charts a little bit. Also, that consequent encroachment on the 4 hour of this, you can even see how we consolidate. Price used this level as like I see it as like a hinge, like it swung around it and then it left it. So it's quite interesting to see how price treated that. So I'm going to leave the daily fair value gap up there, and I'm gonna change the color of this, and I'll call it a inverted breaker because that's, again, once we take out this south side liquidity and we start looking for some kind of buy side, I'd anticipate this to get traded back into, where I'd then continue to look for more sells, because I am expecting very weak dollar to continue. Also, we have CPI on Wednesday, so I can only imagine what that's going to do to the markets. I am going to use the 4 hour breaker, which is this entire candle from this high to this low, purely because when it comes to the DXY, I only use it as a reference for when I'm trading. So I like to keep the time frames I use as high as possible, lowest being 4 hour, any lower, and I don't really pay too much attention. You'll also notice that this breaker lines up perfectly with the 50% off this fair value gap that's just been created. I'll show you that now. And let me just make my Fibonacci look a little bit more presentable. So yeah, the 50% level lines up with the top of this inverted breaker, so this fair value gap, and when price fails to trade above the 50% level of a fair value gap, that shows weakness. So again, this is adding confluence as to why I'd want to see price trade into this area. However, I wouldn't necessarily want to see it trade any higher. Not for now, not until this sell side liquidity gets taken anyway. But yeah, so yeah, I'm pretty much expecting lower dollar as per usual, and a potential reach for this bullish order block depending on how bearish we want to be. So let's go into euro, because euro moved considerably higher today. That's what I was trading on my last video. Don't forget to check that out. And I'll go for the weekly and we can have a look. So I anticipated similar movements with euro. I can't actually, I need to find out what I specifically marked out. I believe there was definitely a fair value gap that I wanted to see get used. So I'm going to quickly just refer back to that and get those marks on the charts right now. Right, so it was this bearish order block that I had marked out on euro in my Sunday review. Make sure to go check it out. And I was saying how I wanted to see it act as a springboard for the price. So I wanted the price to trade above it, and it did. And I wanted to see price come back into it, and then use it to spring higher. And that's exactly what you can see happening here. Price came back into it, respecting the 50% level of this entire range. Let's quickly mark that out. And you can see our price comes down, respects it, and then we trade aggressively higher, running into the highs resting here, and we're just about to hit these highs. And then we've also got a I believe this is a rejection block. I'll double check that in a second. But yeah, it was beautiful to see this play out, and you can see how all the volume stayed right within the actual order block, and it literally, again, used it as a springboard to move higher. And this is why I like to look at order blocks on the left side of the chart, because I like to be able to understand that, okay, since I've traded through it here, I now want to see this order block act as a bullish order block, because here it acts as a bearish order block. We trade through it, it should now act as a bullish order block, and that's what we see happening. So once we take out this high, what do I expect? This one to then act as a bullish order block, and it just keeps doing that really over and over again. That's how I'm seeing price. That's how I'm starting to see how price is moving. I will drop down to the hourly so we can have a better look. So as we opened, traded lower, making this low at 2 a.m, then traded higher, took out buy stops here, came down one more time, taking out these sell stops, and then we aggressively pushed higher and started to run for the buy side liquidity. So yeah, and you can see how we're just continuing to trade higher and higher, which is why tomorrow I am anticipating some kind of retracement. But I'll look more into that in a second. I'm going to quickly look at GBP just to show you. GBP, these are pretty much the same markings. I did anticipate this get traded to. I didn't anticipate this big movement lower. This is showing a lot of weakness in pound, or it's showing strength in euro. To be honest, like I said, pound has moved way higher than what euro's been doing anyway. So pound's already done the work, which is why this isn't too much of a surprise. But it's interesting to see nonetheless. Traded down into this fair value gap, turned around and traded very aggressively higher, and now we're starting to push into that massive weekly fair value gap that I marked out back on Sunday. So yeah, you can see like the market seems to be in a rush. That was only Monday's trading. I don't usually trade Mondays, and to see this much movement on a Monday, again, it's starting to frame what kind of week we're going to have. Probably quite volatile, and again with CPI on the Wednesday, I can only imagine what this is going to be, what's to expect. So moving forward, what am I to expect tomorrow? Well, like I said with DXY, I want to see this low get taken out of this outside liquidity, which means I'd like to also see on euro. By the way, guys, I'm focused on euro right now, in case you haven't noticed. So right now on euro, I'm expecting this buy side to get taken, and then that big black line up here is delineating a weekly rejection block here. I did mark this out on the Sunday review as well. Again, go check it out. So once price reaches up there, I'm expecting some kind of retracement, and then when it comes to a retracement on euro, to be honest, I am looking at this wick. What you have, one thing that's important to remember is that wicks are ranges too, like wicks are gaps too. So once this gets traded through, as in once we take out the buy side liquidity, I then draw a box out like this, draw out the 50% level just like I did with that order block, and then I'd like to see how price trades around it. But first I want to see that buy side liquidity get taken, and then I'm expecting some kind of consolidation and slight retracement back into this range. But that's once we get through it. So yeah, that's pretty much everything, guys, for this review. Again, don't forget to check out my previous video if you want to see trade executions. I know a lot of you are interested in those, and I don't really make them, so check that out. And also I have a new Instagram page at it's gbpbaby, so go follow me there. And that's pretty much everything, guys. Thanks for watching. This has been gbpbaby, and I'll catch you tomorrow. Peace.